outlook for Wednesday, July 29th. Alright, yesterday here left a rejection block inside of the range. We'll look at the profile on the lower time frames, but the daily chart right left a wick inside of the range here. It traded inside of the low-hanging fruit sell side liquidity pool that we had identified being the high of the monthly fair value gap. In that case, there happens to be this. I had previously here a weekly fair value gap. I changed it to this daily suspension block here. You can see price has been sensitive to these levels, so now that it's showing inside of this range, I'll be interested in seeing how today will be FOMC, will be earnings. So I do think that these levels can provide sensitivity for either a shakeout to trade higher, if not as an expansion for areas. This would become a mitigation block here this week, right? Okay, so drawn liquidity for the day in premium, right? So if price would have an open low high close, this would likely look like, could be a classic buy here already from here. Price has traded inside of the wick and is already trading higher. I mean, not really, but this is something we'll looking at the 3-day look back. But in case, say, maybe of a consolidation raid profile, right? Something that will accumulate, and then we'll have a shakeout related, as of the 2 p.m. 4-hour candle, FOMC, the decision, right, and then the press conference, and then after that there's even earnings. So because of that, I do anticipate that. But the thing is, price here comes from a rejection block, so if it's bullish, I think that it should start trading higher early on in the day, right? If already by, I would say, the beginning of London, price already not trading higher, then this probably will not be a classic buy day, right? It's probably something that's gonna range and then do something related to the PM session. Okay, so premium drawn liquidity, I think that price can come back obviously to the new week opening gap, right, which is right here. Oh, sorry, right here. Right, that happens to cut through. Here there's a wick inside of the range. This is the same level that we have on the 4-hour chart here. Right, has proved it is essentially a balanced price range here, right? So price could come back, if it's going to trade past the new week opening gap. Well, the new week opening gap happens to be inside the lower half of it, right? But somewhere inside of the range around 28,500 up to 28,800, right? All depending on how volatile this can get. Past that, there would be here the suspension block, right? And then we'd be getting back inside the levels of this mitigation block here, right? A bearish mitigation block. In terms of discount, sell side pools, the pre is daily low, but the S&P 500 currently is much stronger than Nasdaq. Okay, currently we have a divergence at this monthly fair value gap. So if there is some kind of range profile, or coming inside of New York or the FOMC event, see that price has already taken out the previous daily low and is trading higher. Right, price could reverse from there. Okay, so this is why, in my opinion, or you can be short into these levels right on the first stage, and then eventually price could reverse from there. So there's many ways to trade around it, but that's what I'm saying. This is definitely a low-hanging fruit if you have a short trade, right, a short idea. And then if you're anticipating an expansion, right, in terms of a daily profile, I do think that price can displace all the way lower towards 27,000, right, to the high here of this weekly inefficiency inside of the range. I mean, so far, right, again, what's the big picture looking like? Expansion, consolidation, right? Now price is moving against this consolidation, but in my opinion, there hasn't been a significant shakeout here. Price spent way too much time at the highs, and this overall, the market has retraced what, about As it's just about 11%. Right, usually the market that's about what it will retrace, or at most will go up to 20%. Right, 20, 15, 20% here happens to be OTE of this range, which that's the level where we have the weekly inefficiency. There's also the January highs here, which is a weekly breaker. It's also the range of the previous yearly high, right? So we start getting into high resistance price action for right, for a short trade or a short idea. Four-hour charts, right? Same picture in terms of drawn liquidity. Low-hanging fruit. There's the new week opening gap, and there's the rejection block from the weekly low of 2 weeks ago. And if price were to trade past that, we're then looking at the previous weekly high and price trading here inside the breaker of the range. But I'm not sure this is, well, anything's possible, right? That's really like an extreme case, right, in terms of a very explosive expansion. But overall, here, right, this is at around 50% here of the range that we're trading in. The new week opening gap. There's the wick. There's an inefficiency here inside of the range. So it will be very important to see the reaction here. This is mostly what I'm interested for today, right? Is to see how price reacts here at the lows, or how price reacts at 50%. Right, so profiles could be this, right? Could be something like this. This is where the two-stage would happen, related to FOMC and then the press conference. Obviously, many profiles possible, but right, I'm paying attention to how the lows will be traded. Is there a sweep? Is there a divergence? Overall, does the daily suspension block, does it get respected, right? Does price trade to its low if it were to trade there and respect it? Or will price trade higher, right? And then trade inside the new week opening gap, trade inside of, right? There's a lot of, the range here is high resistance. It's a balanced price range at these levels. So it will be very, very important to see the reaction if price trades in premium here. And again, if it's able to displace it, then you're looking at the inefficiency that's left unfilled inside of the range. And past that would be the highs. And in terms of a discount draw, again, there would be the low here and the lower half here of the daily suspension block. And then past that, you can look for further prices, trading towards 27,000. Already a level identified. I think it was something right in the middle, which was here I believe was, this level was right, this is a devil's mark here. Price didn't trade below. It happens to be also a new the opening gap that's left unfilled, so it's located around the range of 27,300 and 27,200. Okay, so but main level, right? How does price trade at the NWAG, and how does price trade at the low? We can look at this from an hourly perspective. All right, so if we look at the phase of price delivery from the last 3 days, price here came from an expansion, eventually consolidated, creating a swing to Z. This was followed by shakeout in the range, classic sell day here, right? So expansion, consolidation, expansion, and then yesterday, in my opinion, this is a consolidation profile here. It can be that this will end up being the low here, right, because of its reaction. But overall, I don't really like the closure of it. Yes, this is expansion to consolidation, but overall the trend here is still bearish, right? We come from expansion to consolidation essentially here. I would have labeled this a New York reversal if price would have at least traded above midnight. Closed above the midnight opening price. Alright, it didn't even get to the high of day. It simply retraced to 50%, right, and it failed to continue expanding. So you know, if you're viewing this as a bullish New York reversal, in that case, your drawn liquidity should be here, the highs, right? But it's going to be important nonetheless to see how price will trade at 50% of the range. Again, the range is well, it can be low resistance here. I mean, so far this is a balanced price range. There's not been there's not been much time spent inside of this range. So ideally, if you're bullish, that's when you want to see low resistance going inside of this range. If price were to trade inside of this range, right, and then you're anticipating a delivery towards premium liquidity, but price ends up creating high resistance, right, or right away reverses, that's, in my opinion, that's not a good sign. Because price hasn't spent much time yet, right, you wouldn't want to start seeing that happening as you're trading long, right, and price is stalling inside of this range. Right, and at the lows again, because I believe this is an expansion to consolidation profile, I do believe that price should make a new low, you know, or at least some kind of divergence, either between the current daily low or the previous daily low. It could also, you know, trade lower here. I think we have a perfect scenario here for a potential shakeout here. Right, price leaves a double bottom. Right, so if we can get a profile that aligns, say, with a consolidation raid, right, to then reverse higher, in my opinion, that can provide a great trading opportunity. For me, these are the best two trading opportunities. Price taking out, right, these lows, creating divergence, key time of day, right, ideally related, well, for me, because I will only be looking to trade or to participate into, right, as of 2 p.m., but can be an opportunity also if you decide to trade the New York AM session, right, the opening range 10 a.m. By looking for this or looking for this or looking for this, looking to get involved inside of this trade here, if it were to give it to me. Yeah, because it could be that if this scenario happens, price never retraces into it, right? It simply leaves it as a balanced price range and keeps expanding above it. Okay, quick recap. Yesterday left a rejection block inside of the range, trade inside of the low-hanging fruit sell side liquidity pool that we had identified. Okay, so now price still comes from an expansion, right? You can see here price comes from expansion. So today should be a pretty important day to tell us if the trend here will reverse, retrace, right, or simply consolidate, right? Overall, again, there's the new week opening gap, which in my opinion is pretty important. If price is able to reclaim the new week opening gap, then I do believe that it's going to want to trade back inside 50% here of the range. There's a balanced price range here of 50%. So again, this is in my opinion the low-hanging fruit discount, premium liquidity pool. And in terms of discounted liquidity pools, there would be the previous daily low. It's going to be important to see how price trades there, all depending obviously on the profile of day. And then past that, if price will be an expansion daily profile or a consolidation raid, then I do believe that price can trade towards the range here of around 27,000. It would be a pretty large expansion. It would need to be an expansion day though. For our chart, same picture, right? It's going to be, we have a range here. It's going to be important to see how price trades if it were to trade in premium first. If not, how's it going to trade if it trades in discount, right? Because it's still trading inside of a daily suspension block, and so far it's proven to hold its levels. Right, again, there's that double bottom here. Overall, you can see price already rejecting inside of the range here. So I do believe that price will attempt to go lower again, and then it's just going to be important to see if, you know, is there a sweep or is there displacement below the slope. right? And if there is displacement, we're looking at 27,300, 27,200, and then below that we're looking at the weekly, at the discount of the weekly fair value gap. 3-day look back, we analyze the phase of price delivery. Price comes from a consolidation to expansion to what is, in my opinion here, consolidation. But you know, maybe this will end up being New York reversal here, and I will be proven wrong. But I'm just not convinced that this is enough for it to be the low. I would like for price here to range and then take out the low to then go higher, simply because of the time aspect, right? The fact that it's FOMC. I would personally prefer for price to consolidate first, right? And then for the move to happen around FOMC. I think that's what would be the easiest daily profile to trade is what I'm saying. And again, new week opening gap, this is a premium level. This is a pretty important level. If price is able to reclaim this level, it's going to trade for the 3-day look back. You see we have relative equal highs, and then above that there's a 4-hour discounted fair value gap. Alright, I think overall that covers it, so good luck and good trading.